Hello, this is Brad Macbeth of Macbeth Group Financial Strategies. Thanks for joining me today and allowing me to show you how one of our simple yet most powerful strategies could help you to pay your home mortgage off years sooner and save thousands of dollars in interest and taxes. By the way, if you like this strategy, you'll be interested to know about some of our other strategies, such as all-in-one banking and personal mortgage insurance. All of our strategies are designed for typical Canadian families and their finances. Now, first off, we didn't invent this method of making your mortgage payments tax deductible and can't take credit for its invention. It's variously called the Smith Maneuver, Tax Deductible Mortgage Plan, and many other financial advisors have their own names for it. Someone's even written a book about it called The Fireman and the Waitress. Canada Revenue Agency refers to it as cash damming. I want to tell you about a couple of principles that guide our approach to the tax deductible mortgage payment strategy. The first principle concerns debt. There are two types of debt: good debt and bad debt. Let me explain the difference between them. Bad debt is debt for things that decline in value over time, such as cars, furniture, toys, etc. Now, I'm not saying that we'll never have any bad debt. It's just not the kind of debt that's good for you. Many of us take on such a debt to own a vehicle. Good debt is for an asset that will generate some kind of positive return over time, where that return or that increase exceeds the cost of the debt. For example, a house, an education, and there are other things as well. Finally, the best form of debt is debt for which interest costs are tax deductible. And that leads us to our second principle. The second principle is that we can and always should make the most of whatever legitimate tax advantages Canada Revenue Agency allows us in our personal tax situation. The tax laws of Canada, as interpreted and upheld by Canada Revenue Agency and as reviewed by our courts, provide a very complex set of requirements and opportunities. One of the tax principles that makes our economic system work in Canada is that when we invest money, any interest costs we might have are tax deductible. Canada Revenue Agency provides a bulletin outlining how the deductibility of interest works. Bulletin IT 533. It fully outlines their interpretation of the rules concerning the tax deductibility of interest. To put it simply, though, when borrowing money to invest in Canada, the interest costs are tax deductible. That principle is key to the strategy that we're going to show you. Now let's take a look at how the concept works.